Can you explain what's happening here in the futures this morning? Because as far as we can tell, I don't know if you were listening the last 15 minutes, these ban sell comments he said yesterday on our air, and now all of a sudden the world has turned around because he said them in print.
Yeah, look, I think the markets are going through a period of uncertainty, and as we know, markets really don't like uncertainty. There's still questions remaining. The CEO of Moderna this morning, as you noted, raising questions around the efficacy of the vaccine that was probably front and center in investors' mind. And now with that in question, I think we're starting to see this sell off. Secondly, people are still wondering what is the virulence, as you guys were talking about earlier. How severe will this variant be versus the Delta variant? If the answer is maybe not as severe, that is a positive, not as much strain on our ICU beds, et cetera. But if not, we probably have a derailed or a not derailed market, but perhaps a delayed reopening. And so, in our mind, the market reaction here does make a lot of sense. We're seeing a flight to safety in terms of the 10-year Treasury yield now back down to 142. We're seeing, of course, equity sell off, but more of a defensive posturing in terms of large cap technology outperforming, in terms of some of those bond proxies like REITs and utilities outperforming. We think this will be the market posture in the near term. Longer term, we do expect, the reopening 2.0, that second reopening, to continue. We do think we're in a much better position today than we were about a year ago. Keep in mind, not only do we have vaccines and therapeutics in place, we also have a consumer that has a much stronger balance sheet. We have corporate earnings that are strong, and we have a Fed now that perhaps is a little more dovish and not as eager to kind of raise rates next year.
Right. Carrie, what do you think about the headline risk at this point? Because, Cramer was tweeting out this morning, and I think he's right. Over the next couple of weeks, we are going to hear both good news, potentially, and bad news. I mean, there will invariably be a day where somebody announces that this variant is here in the United States, that it's spreading in other places. That's going to invariably be bad news, and the market will take it. And then the question, of course, is what's going to happen on the other end if, in fact, we find out that it's mild or that it's not worse than the Delta variant? And how should investors even think about that?
Well, as Mona said, the market is fragile. On the one hand, wants to be very enthusiastic about reopening, continuing GDP growth strong. It's 3 weeks before Christmas. We want to see retail sales booming. And on the other hand, we've got this impending fear and doom about what's happening with Omicron. What we saw, interestingly, over the last 2 days, and so we only have an N of 2, is one day of big selling and another day of big buying. So we have buyers and sellers out there. And in fact, on the bad day, on Friday, there were $2 billion of inflow, retail inflows, which were a very, very high number, and shows that strength in the market on the retail side, which is relatively new on days like that. That's positive. We also had this big day from the tech giants, the digital players, Apple, Google, Amazon, Salesforce, et cetera. Now, these stocks can perform well earnings-wise, both with big reopening or even if there's some type of slowdown or potential reclosing in places, because they're agnostic to how people are working and where they are when they are receiving their communications and sending them. And they're a big part of the market. So that's almost a protective bubble.